Latin American countries are turning to pro-democracy free market leaders. The biggest threat to their success is the IMF. Hello, I'm Steve Forbes, and this is What's Ahead, where you get the insights you need to better navigate these turbulent times. Last Sunday, voters in Chile overwhelmingly elected José Antonio Cast as their next president. He promised tax cuts, deregulation, smaller government, as well as a crackdown on crime and illegal immigration. His platform was a night-and-day contrast to the socialist incumbent who hated free enterprise and tried unsuccessfully to gut Chile's democratic constitution. Katz's opponent was an open member of the Communist Party. Anti-leftist presidential candidates have recently won elections in the far-left countries of Bolivia, Ecuador, Honduras, Argentina, and Venezuela. Venezuela's drug-dealing dictator Maduro lost the 2024 election to the recent Nobel Prize winner Maria Corina Machado, but blatantly used his Cuban-trained police and military forces to rig the vote counting. In fact, Maduro's security details are primarily Cubans. Soon Maduro will be ousted, and Machado will take the office of president that she rightfully won in 2024. For our sake and Latin America's future prosperity, it is essential that these leaders enjoy visible success in turning their economies around. A huge obstacle to that success is the International Monetary Fund, the IMF. That agency's routine economic prescriptions, primarily higher taxes and currency devaluations, are toxic. They undermine progress. Lowering the value of a currency is the very definition of inflation. Experience has repeatedly demonstrated that low tax rates generate vigorous economic growth and higher government tax receipts. We see the IMF's economic malpractice underway in Argentina. Javier Milei won his stunning victory, promising to slash the size of government and getting rid of Argentina's sky-high inflation by replacing the country's utterly discredited peso with the U.S. dollar. Milei did take a chainsaw to Argentina's obese bureaucracies, but he has abandoned his pledge to formally dollarize the economy. He decided to keep the peso and went to the IMF to borrow money to help prop it up. He recently had to turn to the U.S. for billions of dollars to stabilize the peso. What a colossal mistake. There was precedent in Latin America for dollarization. Ecuador and El Salvador successfully did it years ago. The dollar is also the currency in Panama. Milei's other achievements will be in jeopardy if the economy doesn't soon experience a broad-based boom. That means saying adios to the IMF, replacing the totally discredited peso with the dollar, and slashing taxes, including getting rid of its destructive levies on certain exports. These new free market leaders should follow the time-tested formula for growth: low tax rates and sound money. To that end, they should make sure that the process of setting up legal businesses is quick, ultra-easy, and cheap. José Antonio Cast in Chile should start by getting rid of a job-killing new tax that is being phased in on employers, and also ensuring the Chilean peso stays stable vis-a-vis the U.S. dollar. He might then push for tax cuts by bringing in a low-rate flat tax. Bolivia, Honduras, Ecuador, and soon Venezuela should enact simple, low-rate flat tax systems as countries like Lithuania, Latvia, and Estonia successfully did when they broke away from the old Soviet Union. And those countries should also dollarize, as Ecuador has already done. These countries will then be models for their neighbors and for the world. To do this, they must keep out the IMF. I'm Steve Forbes. Thanks for listening. Do send in your comments and suggestions. I look forward to being with you soon again.